Hello everybody, this is CA Dhwani Patwa and I'm here to explain how to consolidate using IFRS 10 Consolidated Financial Statement. I'm going to take a very basic example and show the basics step by step of how to consolidate. So let's start. Let's read the case study. AB Limited owned 80% shares of BB Limited when reserve of BB Limited stood at 8,000. Here, AB Limited is the parent and BB Limited is the subsidiary. What does 8,000 mean over here? 8,000 is the pre-acquisition profit of BB Limited. Let's read further. Below are the financial statements for both the entities for the year ended 31st December 2020. Prepare a consolidated financial statement for AB Group as at 31st December 2020. Fair value of non-controlling interest as at the date of acquisition was 74,000. Now let's look at the steps of how to consolidate using IFRS 10. First, we combine the items of assets, liabilities, equity, income, expenses, and cash flows of both the parent as well as the subsidiaries. Let's do that. We add the parents and the subsidiaries' assets and liabilities line by line. Over here, the format of the parent and the subsidiaries' financial statement is exactly the same. So we just add it. Our check turns out to be nil, which shows that there is no error. Let's do the second step. Step 2, eliminate. Eliminate the carrying amount of the parent's investment in each subsidiary and the parent's portion of equity of each subsidiary. So we eliminate the investment in Devi Limited. Since this is an asset, I'm putting a negative here, which means I need to put a credit entry. And since my liabilities are credit items, I use a debit here to eliminate the shares of Baby Limited. Fine. Next, I recognize the non-controlling interest and goodwill. How do I do that? I'll show you the workings for that. Fair value of non-controlling interest on the date of acquisition. Now, what is the fair value of non-controlling interest on the date of acquisition? It is clearly given in the question, which is 74,000. We'll take that 74,000. And what is the share of non-controlling interest in post-acquisition profits? So first we have to find out the post-acquisition profits. Now my closing balance of retained earnings in Baby Limited is 32,000. What is the pre-acquisition profit? Pre-acquisition profit, as we read earlier, was 8,000. So the difference will be my post-acquisition profit, which is 24,000. Now I take 24,000 for calculating the share of non-controlling interest in post-acquisition profit. What is my share of non-controlling interest? Now since AB Limited holds 80%, 20% would be for non-controlling interest. So I use 20% to calculate the share of non-controlling interest in post-acquisition profits, which is 24,000 into 20%. So I get non-controlling interest at reporting date as 78,800, which I'll put over here. Non-controlling interest $800. Let's calculate the goodwill. Now, see, we don't have a check as 0 over here, which means that few entries are yet pending. We'll see what is pending. Goodwill calculation, consideration paid. Now, what is the consideration paid by AB Limited to acquire BB Limited? We'll take the value as the value of investment, which is investment in BB Limited as 70,000. Next is fair value of NCI at acquisition. What is the fair value of NCI at acquisition? It is given in the question, which is 74,000. Let's paid up value of share capital. What is the paid up value of share capital? 80,000. We need to less, so I'll put a negative sign over here. Less pre-acquisition profit. What was my pre-acquisition profit? It was 8,000. I get goodwill of 56,000. Now what is pending? Retained earnings calculation is pending. How do I calculate the retained earnings? In my consolidated financial statement, I don't want a retained earning which doesn't pertain to AB Group Limited. How will I calculate that? I will eliminate the portion which does not belong to AB Group Limited. Now we have pre-acquisition profit as 8,000 as given in the question, 8,000 pre-acquisition profit. I'll take that. I want to eliminate, so I'll put a negative sign. I've taken 8,000 as pre-acquisition profit, which does not belong to AB Group. So I'll eliminate that. What else do I eliminate? I add and I eliminate that portion of AB Limited's retained earning that does not belong to AB Limited in post-acquisition profit, which is, what is my post-acquisition profit? Post-acquisition profit is 24,000 and the portion pertaining to NCI is 20%. So I'll eliminate that. Now, if you see, this is what I've eliminated. 8,000 was pre-acquisition profit and 20% of the post-acquisition profit also I've eliminated. And now my check turns as zero. My entry is complete. Let's move to step 3. Step 3 we've already done. Let's move to step 4. Eliminate intra-group transactions. Now, what are my intra-group transactions over here? If we see trade receivables baby limited, which means that baby limited has AB Limited has 42,000 trade receivables in baby limited. So I'll eliminate that. I put a credit entry. Similarly, in trade payables, I'll eliminate the intragroup entry, and this would be my debit entry. My entry is complete. Finally, I'll just add all my figures from step 1 to step 3 to get my final consolidated financial statement. My balance sheet tallies. Now, we see this makes sense. Property, plant and equipment we've added line by line. Investment in baby limited we've eliminated in the final consolidated financial statement. Goodwill we've recalculated. Deferred tax asset we've added line by line. Inventories we've added line by line. We made an adjustment in trade receivables to eliminate the intra-group entry. Prepayments in cash, again we've added line by line. Issued share capital, we've taken only issued share capital of our parent company and not of the subsidiary company, whether the subsidiary company is a 100% subsidiary or a 80% subsidiary, we will not take that. Non-controlling interest, we've recalculated. Retained earnings, we've got a figure of 64,200. Now, if you want to calculate what my final retained earnings would be, we can also do that. I'll just show that. Retained earnings of A Limited. What is my retained earnings of A Limited? It is 45,000. Retained earnings of AB Limited attributable to AB Limited. Now, what would that be? It would be 80% of the post-acquisition profit. So I would take the post-acquisition profit and multiply by 80%. This is what is attributable to AB Limited. 20% is not attributable to AB Limited. I get the final figure as 64,200. Which is what I can see here. Similarly, all the other items we've added line by line, apart from trade payables where we've made an adjustment. This is all for today. Thank you very much for listening to me. I hope this was helpful. Thank you.